Hey everybody, Brian from quantlabs.net here. Hopefully you've seen my videos on government data or public data that you can use to identify sectors that might be worth trading for potential trading ideas. So in this example, let's say my system discovers potentially the sectors of either business services or aero defense products and services, basically category number 760 or 611, and these are traded within the US. Okay. Now for me, I'm on trading ideas and the long and the short. My goal is just to have same sector, same country for the same exchange on the dollar or currency, whatever I'm going to trade within, so I don't have any currency risk as I move between, let's say, UK and US. But for now, what I have identified the markets to trade within, or at least automate a trade in, is US and UK. But with the US alone, there's enough to work with. So in this case, I do a query on my database for all potential stock selection that are in the category of 760, again, business services, or 760 or 611, which is this defense aerospace sector. So when I run the query, I get 124 stocks. Now out of that, I have another query here that is quite interesting. I've shown this script before. I basically run the query, and what I do is I go out and use Yahoo Finance, the servers, to calculate a series of data. This script took about 20 minutes to run. That again is going against the results of this query. So it's going to go out and do 124 queries on Yahoo Finance. And it's going to do about 3 queries for each stock that's listed here. And so, as I said, it's only going to focus on USA. So what happens is the resulting, after each query for each stock, it will add into a massive structure. So it'll include the ticker, the full name of the ticker, the exchange, the country, various data including the mean, standard deviation, the skewness, the variation, the EPS in the current, next quarter, market cap. There's an ATR forecast, 5-day, 20, 60-day, and 250 days. So it's basically saying 6-day, 20-day, which is a quarter for the 60-day, and a 250 for the year. And also, if it can, there's option data. It's going to try to do the volatility as well, implied volatility. So it'll do that calculation. So it'll run and calculate all that data. So here's the result. Now, this thing is probably bug-ridden. As you can tell, there's some bogus data here. Sometimes there's no volatility calculated at all. Not sure, but I'll have to debug that. But essentially, once I get this running, what I do want to use are these metrics to figure out what are my strongest and weakest players, which is essentially my long and my short. So in this case, if I just use EPS as the weight or the priority, I could use these 3 EPS calculations as well as the market cap as well if I want, just to test for liquidity. That's why we go after volatility, implied volatility, to make sure maybe their stock has options. But so let's just focus on these 3. Now, what I've done is I've already predetermined what they'll be. But let's just say I use that. So in our case, I could use this as a short, this Mara, or there's another one near the bottom here. Where is it? Yeah, so I chose this ACFN as a short. Now the other long that I was after is, I believe it's ADS, this one right here. And again, you can see the EPS is quite high. Market cap's pretty good at 3.47. ACFN, It's a small company, but I could probably, if I wanted to, use the Mara or whatever. But market cap, I would like it to be at least $1 billion to really make the short worthwhile. But regardless, this is when it pulled back. Now, let's say if I use just playing here, role playing, that I chose this as my short, and again the ADS as my long. So let's say I did this trade, okay, back in starting in June, okay. You can see here, let me just show you the performance alone on each one. So let's say June or July, we went after, I don't know, at some point we entered into the market at this point. The ACFN, which is a short, it started to get pounded, and it's been pounded. It went up here, and it got pounded again for whatever reason. So that's quite interesting. So let's check out the spread here. So here's the spread. So let's say if we went in here at June 10th and we closed out here, you can see that the return would have been probably pretty decent, I'd imagine. This held its own, or maybe even here. But just wanted to show you that this stock selection can work just alone on the EPS here. But of course, there's other areas as well that I can use to forecast what the market will look like moving forward for better opportunity. But I just want to show you a rough idea of the spread that you could get on things that do well, and this is definitely something that would have worked. Other than that, hopefully that shows you what we can do here in an automated trading world with long, short pair trading. Talk to you later.